everyone, John Henry here, slingshotfutures.com. This time around, we're going to do our standard weekly outlook for the week of February 4th, and we're going to be looking at crude oil, the S&P, the Dow, and the Nasdaq. And really what we're looking for are major areas of interest, something that could cause a potential large move in the markets or just areas of potential opportunity. So first off, starting off on crude oil. As we can see, over the past week or so since, well, really towards the end of January into February, we've seen a good amount of bullishness with a nice lift higher. And that lift higher was pretty aggressive. I mean, we had a really strong lift higher, barely any pullback, and then followed up with another big push up, a little bit more of a pullback, and then another pop higher before kind of faltering around for a little while, and then rallying back up to another new high. And generally, that type of pattern is what you would call a three-push retest, meaning that you have the first push, the second push, and the third push, and the market takes a little bit of a break, comes back and retests it for that retest area high, and that's the area where a lot of sellers start wanting to come in. There we go. So that did end up following through. We had a lot of sellers come in, they shoved the market back down again, and we found a good amount of selling pressure back in towards support. Now, the support areas, we have a few of them. We have minor support at $54.14, and we also have larger support at $53.64. These are the areas that we were talking about last week, but last week we were talking about these as resistance. The market butted its head up against that several times, and the same could be said for up here, just not as often. And when we finally broke out higher, you anticipate when a market has a level of support or resistance that it's going to break above, pull back, and retest, and that's the retest that we're looking for as an area of interest. And that's what happened. We had a nice breakout point of that horizontal support and resistance, and horizontal support and resistance. Again, the second one is stronger. But either way, they both did hold in the end. We had a nice little breakout move. We had a breakout pullback, which pulled back and bounced, and then when that finally gave way, that was resistance, but only long enough to find support at the next area 2 times, and then bounced right back up again. So a very strong area of support coming in at that 53.64, but don't count that 54.14 out of the way because, well, they are still respecting it, just not with as large of moves. So 54.14 still remains to be a relatively large area of interest. Now, if we zoom out a little bit here, we can see that if we look backward here, there's not a whole lot to work with. We have this wide open space that there's really nothing that's standing in the way of the sellers, but we just need to go out and find them a little bit. Looks like we have a very nice level of resistance right around that 57.44 area. We had several tops being put in that location. Now, what we need to do whenever we're looking for a level of interest like that is go backward and see, does this level actually correlate with something else? And in this case, we can't even go back far enough to get that amount of data on there. Now, we might be able to go back 2 years just to see if that gives us a little bit more. But that's generally the process that we're looking at when we're looking at these big levels of support or resistance, is if we go back historically, does the market actually respond to this more than just that one time? Was this one time here in around November of last year, was that a fluke, right? So if we go back a little bit further, let's see if the market comes back. And here we can see, okay, you know what? This level is obviously not a fluke. We have a very nice level of resistance, support, and resistance all through there. That's a very nice area of confluence that we want to keep an eye on. That's really all we're doing. It's just going back and looking at where those major levels are coming in. Now, we can also go back a little bit further and see, just in case the market wants to fly higher, are there any other ones? Now, this one stands out pretty well here at 64.33. Lots and lots of supports, good amount of support. Even when they failed through, they came back and retested later on. That is a very nice area. And if we go a little bit further forward, we can see that there was a breakout point and an attempt to retest. So 64.33 is another area. We're pretty far away from that. But that's what we're looking for on these horizontal support and resistance levels, and that's about all that really stands out right now. So there is a relatively wide open door to the upside if the buyers want to try to take it higher, and it does look like they are. Not only do we have a 50% hold from the bottom to the top, right? So if we measure bottom to top, we have a 50% pullback. That's also a pullback to rising support and horizontal structural support, all nailing the exact same spot. So everything kind of culminating in that exact same location really led us to believe that buyers are going to be coming in a little more aggressively, and sure enough, they did. If you're counting off of that horizontal support at 53.64, it's already up almost $1 from that point. Pretty hard to disagree with that kind of movement. And really now the big thing is simply the fact that we have a trap low, a very obvious trap low, and the buyers are attempting to rally higher. This is a very sharp downturn, okay? We can't lose sight of the fact of how aggressively this fell off of the highs. So knowing that it fell so aggressively off of the highs, we do need to pay attention to where the sellers may want to come in. Now, they don't have a ton to work with, but we do at least have a fib to the downside. We'll mark that up, and we'll switch this with a template of bear so that it's red. Right there. There we go. So we have our bear fibs, and right now price is sitting directly on top of the 50%. That's at 54.52. If these start breaking down and we start seeing a little bit more of a lift higher, that's where the buyers really stand a chance. And if the 618 starts losing ground, it's more than likely that we're going to see the buyers try to reattempt those highs. We do have falling resistance in the way in the form of a much larger wedge / channel, but it could definitely be an area of interest. So crude oil, looking pretty interesting here, but we just got to see the sellers give up. Now, shifting gears over to the S&P, and really this goes for a lot of the index markets, the Nasdaq even somewhat, in that we've been really chopped up for several days now. I mean, we've been having a heck of a time inside of here getting anything going. The S&P is sitting directly on top of the major bear 618, and it's now starting to break above that. Now, we also have that combined with another level of resistance at 2703 3/4, and don't lose sight of the fact that 2700, that giant round number, is smack right there, and you can see how much support is coming in off that 2700. So everything lining up to really cause just a mess of a market at the very least, if not a potential reversal point, and the market did not respond with a reversal. We have a bullish move going back up again and trying to break out through new highs, which it's doing right now. Now, with this breakout move to the upside, all the index markets are seeing it, but notably the strongest is the Nasdaq. The Nasdaq had one heck of a lift higher off of that major support at 68.65. And it hasn't really looked back. Just keeps going up. So the tech sector is definitely feeling some love today, but all the indexes are catching a nice lift to the upside. We can see here that over the past week or so, we had a very strong lift up, a small stagnation right at the falling resistance before leading into another breakout. With that kind of momentum to the upside, it almost leads me to believe that we might be dealing with a high-to-high measure, and this is something that you really only have to worry about in very aggressive markets, but where you're measuring from the high breakout point. And this is important. Notice the fact that it never pulled back to retest that support level, right? It broke out but never made it back before going back up again. That is a very strong breakout point, and we can usually utilize a Fibonacci measurement from the high to locate those areas of support or resistance. Now, again, this is generally reserved for very aggressive markets, but if we go high to high, we can see that even then, the 50% they were holding off of. They were not allowing the market to come down and test it. So buyers are still extremely aggressive to the upside, and we could be looking for a high-to-high pullback at some point. Currently, if the market were to fall apart right now, that 50% level is at 95 3/4. It doesn't really line up with a whole lot. I kind of hope that the market increases in value just a little bit more to get that support higher up. But overall, all things considered, we are seeing an attempt to break out to the upside. The buyers are definitely in control, and this is off the backs of the fact that we haven't even had a trap low. They couldn't even trap the bottom here. If they would have, I think it would have looked a lot more like the Nasdaq, but they held a higher low and now we're breaking higher. So a big area of interest that is standing out right now is the low of this consolidation. Somewhere inside of here, doesn't have to be exact, but right inside there at 26.98 1/4 or so does look pretty good, just because of that small little zone of interest, right? Not going back further or anything like that, but just looking at this overall congestion. Every time the market dipped down to that zone, it was bought up pretty aggressively at 98 1/4, just below that 2700 mark, and that would lead me to believe that buyers are looking to pick up pullback. So if we can get a pullback after it makes a high all the way back down to that area, that would look very nice for a potential secondary rejection back to the upside. Aside from that, the market is pinned to the highs. It's still rallying higher, even though this morning started out really garbage in terms of overall movement. All of them are moving up right now, so it looks like the buyers have a shot at trying to maintain control. They're just in a very nasty spot. The last time they tried to break a swing high was a complete failure. Now they're trying it again. We'll have to wait and see how well that works out. But for me, I'm looking for a little bit more of a pullback before I get too interested in the S&P. Now, when it comes to the Dow, it's pretty much the exact same thing. Big difference here is that it wasn't as aggressive on the breakout. That swing high, they actually came back and retested it. So we don't have a high-to-high measure or anything like that to work with. All we have is the longer-term move to the upside. And same situation. We're holding higher lows, higher highs, etc. But remember, we were just talking about in the S&P having a trap swing low. The Dow did have that trap swing low. The S&P did not. So with that trap swing low, the Dow has a chance to really go flying higher here if it can break out through the top. They're trying to get through this current level of resistance, which they've left back a little ways, but it wouldn't be a surprise to see a quick pullback, test, and then challenge those highs again. And then we're looking for an upside objective at around 25,200, which is a full 100 points higher from where it is now. Most of the analysis stays the same from what we saw in the S&P, with a slight caveat of the fact that they had the trap low in the Dow, and they did not have as strong of a breakout in the top. So you got a little bit more of a mixed bag when it comes to the Dow. Everything looking pretty good, though. If they can stagnate a little while and just kind of go nowhere, we do have a combination area of interest up here with rising support, falling resistance, and the previous swing high all stacking up around the same area. That's at roughly around 25,150, 160. But aside from that, really kind of looking for that upside objective of 25,200. And then over on the Nasdaq again is the strongest of the bunch. The tech sector saw a lot of love today with a very nice rally to the upside, breaking out above the highs. And the same concern holds true. Yes, we're breaking out through the highs, but is it sustainable? That's the big question that we have to ask ourselves. This is a very strong rally to the upside, and the last time we saw something that strong, it kept going for several days before even pausing. This could just be the start of a massive rally higher, or this could be the start of a false high into a massive dump back to the downside. We're not out of the woods yet. But the one big key level that we're looking at, obviously, is the massive bear 61.8. That's at 69.99 and 75 cents. Of course, basically just say 7,000. That will be a big area. And given how aggressively it's rallying up towards that, it's only 50 points away. That might be the magnet that the Nasdaq is looking for to get kind of sucked up into that 7,000 and then look to kind of do what it needs to do afterward. Either way, the Nasdaq is the strongest of the bunch, and we have a lot of breakout movement that's going on here. We have falling shallow resistance, falling major resistance. All of those have been broken. We do have rising support, creating two areas of interest on a pullback. The first one is going to be a little bit further down. That's going to be at around 69, well, just shy of 6,900, actually closer to like 68.80, 68.85. And then if we can hold off a little while, maybe stagnate for a while, get a pullback, that would be closer to 6,900. Obviously, that would be the preference because that has a whole number advantage as well. But all things considered, everything is looking really strong at the moment. The key that we need to see is the Nasdaq not lose these highs. They broke above it. Now they need to hold it as support and keep going. If they lose those highs, then we stand a chance of seeing something like this where they try, fail, come back, all the buyers jump ship because they realize they're wrong, and that's when the big pullback happens. And then we could start looking for 68.50s or so, which is a good chunk of distance away. So I think a lot of buyers are really hoping that this sticks it to the highs and keeps going, but we are in a very important area right now that the buyers need to sustain or they're going to be running into trouble. Right now it's buy side, but that can shift real fast if they lose those highs. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting. Maybe something you can add to your tool belt. As always, underneath the video, throw a thumbs up on the video to show us that you like the content. Of course, along with that, subscribe to the channel so you don't miss anything important. And just to make sure that you don't miss anything important, those good old YouTube algorithms can be a little bit funky sometimes. Click the notification bell icon to the right so you're notified every time the video goes live so you don't miss anything. That's going to do it. If you have any questions, feel free to shoot me an email, jbrink@slingshotfutures.com. Until the next one, I hope you had a fantastic day of trading, and we'll see you all in the next one. Thanks.